Hey traders and investors, it's Serge Berger here. What we're going to take a look at today is a very simple question, and that is whether the markets, the stock markets, have peaked. Have we reached the highs that we're going to have in this bull market cycle, which now, by the way, is 5 years old, or are we going to go a little bit higher? To look at that, we're going to look at a couple things. First of all, we're going to just consider a number of different sector charts. Okay, let's start with that. So if you look at the financials, you continue to have a chart that is moving nicely upward. It's holding its moving average. It failed to sort of continue here in the immediate term to break to new highs, but it's basically just retesting the break past the January highs. You can look at the industrials. Same exact thing. We're just basically retesting the breakout levels. You can look at the energy sector, which actually looks quite nice. The energy sector has to be taken with a little bit of a grain of salt, but at the end of the day, if energy stocks are going higher, then that is not a bearish thing for the broader stock market. And we can also take a look at another cyclical sector, which is the consumer discretionary stocks, and you can see those are holding in as well. The only warning sign here is the utilities, which is a defensive sector and has started to move over the past few days. It is basically doing the same thing as the others, but it's started to bounce here a little bit as the market had some issues early this week. So through this lens, more or less the stock market looks to be able to push higher. We can look at individual stocks as well. Most of those actually look like they can still continue higher. Another thing we want to look at then is very simply new 52-week highs on the New York Stock Exchange. Tends to be a leading indicator. In this case, you can see we're still making new 52-week highs at a very nice clip. If and when this turns over, it's usually about a 6 to 8, maybe 10 months lead. So this too still looking okay, going higher. No real reason to be too concerned about in the immediate term. And last but not least, let's look at the relationship between the large caps. So I'm going to here have the S&P 500 as represented by the SPY ETF in blue versus the Russell 2000, which is small caps. I'm using the IWM ETF for that. A lot of times you'll see the small cap stocks turn over before the large and the mid cap stocks turn over. In this case, the only thing we have seen here, literally just over the past few days, is a little bit of underperformance by the Russell 2000, but it's literally like a week old. So this type of indicator would come probably 6 months in advance. This divergence is not yet meaningful enough for me to be able to tell you with a straight face that the stock market is done going up. I think all else being equal, and the things we just looked at, none of these things point towards a stock market that is immediately ready to turn over. I think stocks look like they have another few percent to the upside, and certainly more than anything, it's going to take us more time. There's a famous saying that says tops are processes, whereas bottoms are events. And most of the time that holds true. You can see that for a very simple example here in February. Bottoms are very much V-shaped a lot of times, whereas tops just take time to process. Hope this makes sense. As always, if you got any questions, you can tweet me at my Twitter handle, which is SteadyTrader. Take care.